rates have been having a big impact on the financial sector, and investors are watching the Fed very closely right now. For more, let's bring in the CEO of TradeWeb, Lee Olesky. TradeWeb is a leading global operator of electronic marketplaces for rates, credit, equities, and money market, and he joins us now. Lee, it's great to see you, and that is really where I want to start. The fact that we've seen volatility not only in equities, but in the bond market and fixed income more broadly as of late. What's that meant for business?
Well, yeah, it's great to be back. This has really been an extraordinary year for TradeWeb, a real transformative year, and I think much of it is due to the acceleration of electronic trading. At the same time, as you point out, we have an uncertain environment in the rates market with the tapering and interest rate rising, which has been a material impact for our business. As you see, we just had our November numbers out. Our business has surged in November. November was actually our second biggest volume month, October being the first. But we're now trading, about $1.2 trillion a day in volume, which, just to give people some context, is actually 1.5 times the entire equity markets combined. So we are seeing terrific growth in our business.
That is some context right there. I want to dig into that a little bit more. But first, just the fact that there are really no shortage of macro factors that are playing into this volatility dynamic that we're talking about. What would you attribute that to, and how would you expect that to play out on your platform going into 2022?
Yeah, I think it's really two things. One is, the pandemic situation, the remote trading activity, the move to home 18 months ago really has accelerated electronic trading. That is a secular change that has occurred very rapidly over this time period. And you can see that in our numbers. You can see that in the growth of the market. And then next to that, you have really what's happening in the rate space, as you guys have been pointing out, with respect to tapering and really uncertainty with respect to where interest rates are going to be in the next few years. That has accelerated trading. Our Treasury volumes are up significantly. Our interest rate swap volumes are up. The month of November, year on year, was up over 75%. Treasury's up over 40%. And these days, TradeWeb is now the largest platform for trading Treasuries electronically in the world. So these numbers are a good reflection of what's happening in the markets.
Yeah, Lee, obviously the long-term trend toward electronification, very clear, been going on for a long time, seems to have accelerated. I do wonder if we do get more dislocations in markets, if the credit markets themselves don't trade as smoothly as they have been, would you expect that on a relative basis, the higher touch kinds of trading venues are going to do better? In other words, the traditional phone-based or broker-based type methods?
Well, it's tough to predict the future, but I can say based on experience, and really this trend, Carl, that you're pointing out that has occurred, is there's much more comfort and many more people interacting electronically. And I think that will help in times of stress. There will be times of stress. That's how markets work, and there will be periods where there will be rapid movements and less liquidity. The advantages today are there's more transparency, there's more connectivity, and there's actually more participants providing markets. So we are set up for that event, but it's hard to predict exactly what's going to happen, specifically.
All right, Lee, we appreciate your insights. Thank you for joining us today. Stock's under a little bit of pressure today, but it's up about 50% for the year.
Right.